Hello, and thank you for your interest in the Wells Fargo Open for Business Housing Assistance Grant. This is a quick tutorial to show you step-by-step how to apply for the program funds. Just as a quick program outline, we have available one-time grants of up to $30,000 per building. These are for COVID-related expenses, such as lost rent due to vacancy, increased utility bills, other COVID-related expenditures, and building maintenance and repairs. There are some program qualifications. The applicant must be based in the Chicagoland area. All eligible expenses must have been incurred between March 1st, 2020 and June 30th, 2021. Unfortunately, expenses that occurred after June 30th, 2021 are not eligible. Rents must meet the attached affordability requirements. You can find these on the CIC program website. The property must not be financed by federal public subsidy. Housing choice vouchers do not count as subsidized. In order to be eligible, a property must have 4 or more residential units and be located in the Chicagoland 6-county region. All owners are eligible for up to 3 grants per portfolio. Please do not apply for grants for more than 3 properties. If you own more than 3 properties and would like to apply, you may only choose 3. And finally, the applicant's total investment real estate portfolio must be at or under 50 residential units. Now we'll go over how to apply. First of all, you want to go to the CIC website and download the application and all supporting documents. The first step will be to complete the application. All applicants will complete parts 1 and 3 only once per property owner. However, if you are applying for multiple properties, make sure to complete part 2 for each grant you are applying for. And just remember, it's a maximum of 3 grants per owner. Then you'll want to make sure to compile all your supporting documentation. This includes documentation of the expenses you're applying for and a Schedule D. The Schedule D will verify that your total portfolio is at or under 50 residential units. Once you have all of these items completed, submit the completed application along with all of your supporting materials in one email to grants@cicchicago.com. Now let's go through the application. All right, this is what the application looks like. You will find this on the CIC website for download. It's 6 pages long. The first page is just describing the program itself and the requirements. And the second page goes through each type of eligible expenses and what constitutes appropriate documentation of those. Part 1 is the beginning of the actual application. Now remember, if you are applying for multiple grants, you only need to complete part 1 once. So you want to start off by filling in your name and then your LLC name if that is applicable. Now here in program addresses, please make sure to list all of the addresses for which you are applying for grants. Again, it's a maximum of 3 grants per applicant. All right, at this point, you also want to make sure that you are filling out a Schedule D form. This is what will help us determine if you have at or below 50 residential units in your total portfolio. The Schedule D form will be also found on the CIC website. It looks like this. For this form, you'll just want to fill in each property address, the number of residential units. Remember, it must be a minimum of 4 residential units in order to apply. Although on here, you want to make sure to list every property that you own for investment purposes, whether it's 4 units or lower or higher. Number of commercial units, if 0, just put 0. The date that you acquired the property, the percent that you own. So if you co-own the property, you just want to make sure include your own percentage. We'll say that this property is 50% owned. Who the title is in the name of, the current market value of the entire property. If you have a mortgage balance on the property, make sure to include the current balance in this box here, along with the mortgage maturity date. You'll want to include the name of the lender and the loan number, any contingent liabilities if obligated on the mortgage, and any comments if you have them. Now, just note that these columns here will auto sum. So we will have record of the total number of units that you own for investment purposes this way. If you own more properties than there are rows on this sheet, please feel free to print off or fill in a second sheet. Finally, make sure to sign and date the form. All right, back to the application. Once you have your Schedule D completed, please make sure to tell us the mailing address where you would like your grant funds sent if you are awarded a grant. Below that, we have some basic demographic information. Please either fill Moving on to page 4. And here we have a section where you can describe how your business was affected by the COVID-19 pandemic and how receiving this grant will help your recovery efforts. This is your chance to provide a look at and the different impacts that the pandemic has had. So you can provide as much detail as you want here. If you have more detail, feel free to attach another document in place of this box here. Below that, we are asking if you have received any other COVID assistance to date. This would be any sort of program, whether that is a PPP, a loan modification or forbearance with your lender, or any other programs. So please list and describe those programs here. All right, moving on to page 5. Now, just a reminder, please complete part 2 once per property. So if you are applying for grants for multiple properties, you must complete this section for each one. So we'll start off by just typing in the property address that you're applying for this particular grant. Make sure to put in the number of residential and commercial units. All right, and then we will move on to reimbursement type. And we'll walk through each of these and what constitutes appropriate documentation. And just as a reminder, if you need to go back and check, you can go back to page 2 of the application, where you'll find a description of each one of these reimbursement categories and with a description of what constitutes documentation. Jumping back to part 2. So we've got our property address filled out and the number of units. So in this reimbursement type, you want to make sure to check any and all of these that apply. So you can have more than one checked. The first reimbursement type is increased utility bills. So let's go through that. All right. So what we're going to do with this is compare utility bills pre-March 2020 with any utility bills that you would like covered that occurred during the COVID-19 pandemic through June 30th. And if you are eligible, we will reimburse you for the prorated difference. So just as an example, if you had a water bill before COVID began, that was $1,000 over a period of 90 days. That comes out to a per diem amount of $11.11. Then you've submitted to us a number of bills, of water bills that occurred after March 2020. Those bills, by looking through your bills, we can tell that the total was $6,318 over a period of 486 days. The calculated per diem in that case is $13. So we can see that there was an average increase. So the way that we would calculate this is take the $11.11 per diem, multiply that by 486 days, which gives us an expected bill of $5,399.46. However, we saw in the actual bills that the total here was $6,318. So you would be reimbursed for the difference between these two, which in this case is $918.54 eligible. All right, so going back to what constitutes appropriate documentation for increased utility bills, you want to make sure that we are given the actual water bill. Here's an example. So we need copies of the actual water bills that you receive from the City of Chicago Water Department or whatever water department you are applying for. So we need to have at least one bill from a time period that occurred before March 2020. And this is so that we can calculate what your average usage and costs were before the pandemic. And then using your bills from during the pandemic, we will be able to see an increase should you have one. So again, make sure to provide at least one bill from before March 2020, and then also include any bills between March 2020 and June 2021 that you would like considered for reimbursement. All right, the next category of eligible expenses is non-recoverable lost rent. These are cases where a tenant has vacated a unit between March 2020 and June 2021, or the lead up to a vacancy in those cases of non-payment. So let's assume that this applicant has eligible non-recoverable lost rent. Now, in order to document this for us, you need to fill out the trailing rent roll, which can again be found on the CIC website. It looks just like this. And what you'll be doing is you want to fill in any cells that are highlighted in this yellow only. Anything else, you don't need to worry about. Once you fill in the yellow cells, they will turn white. All right, so let's start with this first page here. And you just want to make sure to fill in all of these items here. And then jumping down, this is for the whole building. We just need to know all of the different unit numbers, and sometimes if various unit numbers have different addresses, this is where you want to list those. All right, so in this case, this building only has 5 units. So at this point, we can stop and we do not need to fill anything else out on this page. Now you're going to go to each tab down below, starting with March 2020, and you're going to fill out all of these tabs all the way through June 2021. So we're going to start with March 2020. As you can see, based on what you put in on this first sheet here, it auto-filled in all of your addresses and unit numbers on each of the individual month sheets. So you don't have to retype those every time. So now what we're looking at is what your rent collected versus what your potential rents were for March 2020. If the unit was vacant, make sure to enter vacant in column C for that unit. Next to the tenant name, put the lease rent. This is how much the unit is leased for. And then in the next column, put the amount that you actually received. In this case, we're going to say that the full rent was received, therefore there's no amount due. Now, let's say that this next unit here also had a lease rent of $1,000, but payment was not received on this unit, so we're going to put 0. And that will leave us with a total amount due of $1,000 for this particular unit. Now let's say that unit number 3 was actually vacant. So we're going to type in vacant. And then also you still want to make sure you put the lease rent. Let's say in this case, this unit would have been leased if it were occupied for $1,000 as well. And obviously, because it is vacant, no payment was received. So therefore, we've got a calculated amount due of $1,000. And because this unit is marked vacant, it also will populate into this vacancy loss column here. So you're going to want to go through every month and complete the rent rolls for each month up and through June 2021. Now, if we go back to the first sheet, you will see that the totals from each of these tabs for each month have been auto-filling in here. And this is what we will use to help calculate what you may be eligible for. All right. So going back to our lost rents resulting from vacancy, now that you've seen how to fill out the trailing rent roll form, how are we actually calculating what you are eligible for? So what we're going to do is compare your rental losses during COVID to a standard expected loss. And for the purposes of this application, we are assuming that any income generating property has a built-in loss underwritten at 10% as a standard amount. So therefore, you could potentially get reimbursed for any loss that is greater than that 10% as a result of unit vacancy. All right, to explain that a little further, here's an example. Let's say that we had a building where the total potential rent over the course of a year was $100,000. However, with standard underwriting, we can expect that the actual collections would be 10% less of that, so a total of $90,000. Now, during the pandemic, or during a year period, the pandemic, $70,000 is what was actually collected by this landlord. So if we subtract $70,000 from the $90,000 expected rent, that leaves us with an eligible amount of $20,000. However, of that $20,000, $10,000 was actually due to vacancy. Therefore, in this case, the applicant could be awarded $10,000 for that loss resulting from vacancy. Again, the only type of lost rent that is eligible is due to vacancy. Tenant non-payments, where the tenant is still living in the unit, is not eligible. Again, just a reminder, in order to apply for this type of reimbursement, you want to download the trailing rent roll that we had just ran through. Looks like this Excel workbook here from the program website, which you can find at CICchicago.com. Make sure to only complete the cells that are colored yellow. And again, once completed, those cells will turn white. Make sure that you complete every tab for the months March 2020 through June 2021. You must complete every tab for each of these months. Then save your trailing rent roll workbook and make sure to submit it with your application. All right, the next type of eligible expense is cleaning and maintenance costs due to COVID-19. This is any expenditures that you may have made over the course of the pandemic that were directly as a result of COVID-19. Let's look at a little bit of a further explanation. All right, this is for any direct COVID-related expenses. Some examples of these items would be increased cleaning or sanitation, also issues that may have arisen from more people being at home. Those can be 100% reimbursed. In order to document this, you must provide a copy of the invoice or receipt of the work that was done or maintenance items that were completed. So as an example, if you had to perform additional cleaning and sanitation due to COVID that totaled $3,000, then you would potentially be able to get the entire $3,000 reimbursed as long as it was adequately documented. Another example could be a new security system due to increased package theft from more people being at home. $2,500. That's another example of a directly COVID-related expense. Basically, this could be anything that you would not have had to incur were it not for the pandemic. And so in order to apply for this type of reimbursement, make sure to compile any receipts or invoices. If you do not have any receipts or invoices, then unfortunately, we cannot provide reimbursement. And then in the application, make sure to explain how these costs are directly as a result of COVID. And this box right here is where you're going to type or describe how these costs were incurred as a result of COVID. And then our final category here, other repairs and maintenance. You may be eligible for up to $10,000 in other repairs and maintenance items. Let's explore this a little further. This is something that you may be eligible for if you have not received any emergency rental assistance or ERA and do not have an ERA application pending. And this could be any type of repairs and maintenance that costs that you have incurred at the property. For example, if you qualify and you had to do sewer repairs that totaled $5,000, then we can reimburse the full $5,000 provided the above criteria are met. Again, the limit of this is not to exceed $10,000. So in order to be eligible, please compile any receipts and invoices. If you do not have receipts or invoices, then we cannot reimburse you for these items. And then make sure to complete the relevant questions on page 5 of the application. These are right below this category here. So you want to make sure to answer if you have applied and those could be via IDA, Cook County, the City of Chicago, etc. And then if you answered yes, we just would like you to please explain your current application status and make sure to include the relevant unit information. So which units you applied for and which ones you may have received versus rejected or are still pending. If you did not apply for any of the emergency rental assistance, then below, please explain your reasons for not applying. Moving down to page 6, this is the last page of the application. This is part 3, and this is a series of self-certifications. This part needs to only be completed one time per applicant. So if you are applying for 3 properties, again, make sure to complete part 2 3 times, once for each of those properties. But you only need to complete parts 1 and part 3 once. And here, this is just a series of statements that verify various things about your application to be true. So make sure to print your name here and then sign below. You can either e-sign these or print it out and sign it by hand and scan it back in. All right, just to continue with the actual application. So once you have completed your application and compiled all of your supporting documents, you want to email that to grants@cicchicago.com. All of the applications will be reviewed on a rolling basis and awarded based on meeting program qualifications and the program's goals. If your application is missing any items or needs any clarification, you will have 72 hours or 3 business days to submit the missing information. After those 72 hours, if we have not received the missing items, your application may be rejected. All program communications, including application status updates, will come from the grants grants@cicchicago.com email address. If you have any further questions at all that were not answered as part of this tutorial or in the application, you can send any program or application questions to grants@cicchicago.com. Thank you, and we look forward to receiving your application.